The world is full of risks, and those highlighted risks taking front and center stage at Davos next week. Among them, the risk of adverse outcomes from AI. With me now is Capital CEO Vince Tizzio. New report out on Friday here about cyber risks and the changing landscape. One of the things that I found so interesting, Vince, is that there looks like there's a huge divide between how CEOs think about the opportunities and the risks of AI and the way that their chief security information officers think about it.
Yeah, first, it's great to be with you, Contessa. So our survey, our findings reveal that the optimism of the CEO in the productivity, the efficiency gains in executing their respective business strategies is running at a faster pace than the consideration and concern of the CISOs that you point to. The security officers that are charged with protecting corporate America, private company America, are looking at AI and saying this is an added challenge. The dimension of how AI might show itself at perpetrating a cyber loss is challenging and complicated.
Why does that matter? If the CEO is more confident about the opportunities and the people who are in charge of keeping the company safe from cyber attacks and the like are saying, wait, slow down a little bit. Why is that important on a global scale?
I think just the size of expenditure that's going on in connection with AI, if I can describe it on the front end of the organization, bringing efficiency, productivity gains, balanced against how CISOs are looking at the exposure that the company is facing in cyber against a risk landscape that's actually growing. And so I think there's just necessary caution that the CISOs are pointing to. The rapidity of change that's going on in AI renders reconsideration of the purchases that they're making and taking around the tools that they're bringing to the company. And I think that is crucial because I haven't met a fellow CEO or board member that doesn't talk about the critical importance of discussing cyber as an exposure to the company's well-being.
The other thing that I find really interesting is this gap. I mean, Access Capital calls it a transatlantic gap, the way that
yes.
UK C-suites think about AI and the way
yes.
that US thinks about AI. But my sense is when it comes to AI, everybody has to be on the same page about the risks because you can have the most stringent guidelines in place in the UK, but if somebody in China or India or Iran has different access, different technology, sure. It's going to affect the UK as well.
I think the findings revealed a difference in view around the regulatory framework. You know, here in the United States, we don't have one governing law around AI. We have a number of states taking their own sets of actions on protecting consumers and companies. At the federal level, it's not unified. By contrast, in the UK, we have more of a national framework and an approach toward the regulatory regime. And I think that that's what was being shown through the analysis, the survey that we undertook at Access.
We talked a little bit this week on CNBC about the World Economic Forum Global
Sure.
Risks Report for 2026 and the way that adverse outcomes of AI as a risk, as a severe risk, has jumped from the 30th spot to the number 5 spot on the 10-year horizon. Do you agree with that? Is that a top-of-mind risk for you, especially since you're in the business of ensuring adverse outcomes?
I do, and let me tell you a little bit more about why. When you think about AI, it is not merely a cyber challenge. This technology presents unique burdens, liabilities, challenges and opportunities to CEOs and boards alike. Why? Directors and officers liability insurance, a product that we're in the market and providing customers around the world, is critically important. And so the exposure, what we call an exposure, AI creates new exposures, and how businesses are executing their strategic plans around the use of AI, there's new liabilities that are, or added, I should say, added liabilities that emerge. Directors and officers liability, cyber insurance, inland marine, ocean marine. There's a whole range of exposures that are added because of AI. And thus opportunities.
And you point out in the report that ransomware attacks have more than doubled over the last 2 years. Those affect not only big multinational corporations, but mom and pop businesses as well. What are you encouraging? I mean, I should say for the audience that doesn't already know Access Capital, you specialize in insurance policies for hard to place coverage that if you can't go somewhere else and easily get it, a company might come to you.
Yep.
What's your biggest piece of advice for clients when they're talking about wanting to protect themselves from cyber risk?
Well, firstly, we don't think anyone is immune from a cyber loss. And to your direct point, the range of customers that are buying cyber insurance are from the SME space all the way through the largest organizations in the world. Secondly, the advisor, we call them intermediaries, brokers, insurance brokers, critically important in the selection. Why? Because of this evolving risk landscape, new sources of challenge, AI being the one that we're discussing today, the policies that customers buy have to contemplate coverages that are adequate and tied to the specialty organization that they are. If they're in a range of services and products around the world, they require different terms and conditions from the so-called mom and pop. And so the role of the intermediary is critical here.
When we look at the AI opportunities, part of it comes through the build out of these data centers, sure. Massive $5 billion, $10 billion, $20 billion, $30 billion facilities.
For sure.
Is there enough capital in the insurance marketplace globally to offer the kinds of coverage that are now required? And what's the opportunity for investors in this space?
Yeah, so first, there's no doubt there is an enormous opportunities coming to the property casualty global insurance marketplace to help provide protection for the data center build out. At the current pace, there isn't adequate capital, more from the perspective of the risk tolerance of carriers like Axis and others around what they're willing to allocate toward the products that we're providing toward data centers. And so you have a number of insurance intermediaries, particularly on the reinsurance side of their businesses, trying to find new sources of capital. And that's why you're reading about third-party capital taking interest in this space as well. In terms of the opportunity for a specialist insurer, this is what we do, because it's not merely property insurance, right? You have to make certain that you have adequate liability insurance. You have to make certain that the credit insurance that is associated with these projects. Now it ranges, we have companies the size and scale of Google and Meta and others that have very strong financial wherewithal, but there's downstream financial consequence and thus liabilities. And so the specialist in the insurance world is quite busy around the data center exposure that we're finding.
You're speaking at Davos. I know you're going to talk about cyber risks there. What's the one thing that you hope other business leaders and government leaders and academics take away from Davos? What's the one thing that you would sleep better at night if they knew?
Humility toward the exposure. It is evolving at such a rate and has such bearing on the financial wherewithal of the company. You know, it's not just having adequate money to pay the ransomware demand, which is the largest form of claims today. It's making certain that you stay contemporary with the infrastructure that you need so that your CISO can do their job. And at the same time, to have obviously proven out what I described before as the front-end benefits of AI, which is still under its own test.
Vince, it's great to talk to you.
Thank you so much. Good to be with you.
Good luck in Switzerland.